Okay, so we're moving on to our final company for the day, and that is Po Valley Energy Limited. Po Valley Energy has an ASX code of PVE. It has a market cap of approximately 40 million. Po Valley Energy Limited is an emerging oil and gas exploration and development company with an expanding portfolio of hydrocarbon assets in northern Italy. Presenting for the company today is Chairman Kevin Bailey. Kevin, welcome to the network, and please take it away.
Thanks a lot, Manny. Great to be here. So yeah, we're producing gas in northern Italy. Who would have thought? Can we move to the next slide, please? The disclaimer, and now we've got the company overview where we've been in Italy for 20 years now, and we've got a portfolio of natural gas fields in northern Italy, and we've only just started producing there, so that's very exciting. We've got 5 major licenses. The Selva Malvezzi production concession I'll talk about at a little bit more length, because that's where we've got the Podere Mare 1 well, which we've been producing from since July. And then we've got the Teodorico offshore well, which is 100% owned, as opposed to the Selva Malvezzi, which we own 63% of. Now, Teodorico is offshore in the Adriatic. It's got 37 billion cubic feet of 2P reserves. And then we've got Toro de Moro, which is an onshore condensate exploration license, as well as Cao del Bosco and Grat Assosso. So we'll focus, as I mentioned, on the Selva Malvezzi. So if we can turn the slide, looking at the corporate overview, as you mentioned, about $40 million market cap. You can see that share price chart, which looks very scary and ugly looking. What's happened is 2 years ago, I took over as chairman, and we've been working on getting the Podere Mare well up and running. The share price ran up to about 10 cents about this time last year, and there were a couple of major shareholders that were looking to take some profits, and then they needed some cash, and we don't have any brokerage firms covering us to any great extent. And so what's happened is we've got all of the capital. We don't need to raise any more capital, and we've been looking at getting the ducks in a row, to lining up the ducks. So what's happened is the share price has gone down over the last 12 months or so. Not too concerned what the share price is going to do over the next 2 to 3 months. As a major shareholder, you can see that I've got about 24% of the capital in Po Valley Energy, and I'm very concerned about where the share price is going to be in the next 2 to 3 years, and that's what I'm going to be focusing on and talking about. If we can move on to the next slide, what we're looking at is that we are strategically well positioned. When we did our analysis of the Selva concession, we looked at the gas price, we looked at a best case scenario, worst case scenario, and long-term average. In Europe, they measure the gas price in euros, and the worst case scenario was about 10 euro cents per standard cubic meter. The long-term average is about 20 euro cents, and currently it's around about 30 euro cents. It bumped up quite substantially 2 years ago when Russia invaded Ukraine, and Italy is taking a huge amount of their gas from Russia, and that's all been cut off. And suddenly, as in the rest of Europe, in Germany and in the UK, Italy is very, very concerned about domestic production. Their domestic production a few years ago was about 40% of their gas production. It went down to about 8%, and now they're scrambling to get it back up again. So we're in a tremendous position to be able to answer that need. And so we're taking advantage of that attractively priced gas in the country, in Italy, as they move towards greater energy security. I'll talk a little bit more detail in a moment about our very, very good Italian team that we've pulled together. But we are producing revenue. So that is a really exciting development. From mid-July, early July this last year, we started producing gas. So we did a bit of a ramp up. We did some testing. We've been producing for for about 6 months now. So in Q2 and Q3, we produced just under 10 million standard cubic meters as we've been doing our testing and taking it offline and putting it online, testing different volumes. We're now producing at 80,000 standard cubic meters per day. Now, if you multiply that by 30 euro cents, which is the price, which is close to where we're getting 30 euro cents, that's about 24,000 euros a day. We've got 63% of that. So 24,000 euros is 40,000 Australian dollars per day, and 63% of that is about $25,000 a day. You can do the sums. If you multiply that by 90, you get an idea of what the quarterly production is. So if we can produce 2 million Australian dollars in revenue per quarter, that's about 15% of our current market cap. Our costs are very, very low. One of the things that we're talking about there is got low cost production. We've spent around about 400,000 or 500,000 euros in the last 6 months, but we think that's going to settle down now to around about 600,000 euros per annum, and so very low cost production. And we're producing a lot of gas. And what's going to happen is we've got free cash flow. We've got quite substantial free cash flow, which we can put towards producing some lookalike wells in this concession. So we've got Selva North and South, we've got Selva East, we've got Ricardina, a number of other concessions, which I'll talk about there. We've got quite a very substantial opportunity to develop these. If we have a look at these lookalike wells, they're going to pay for themselves in 12 to 18 months, as has the Pot des Mers well that we're currently producing from. So if we can drill these wells and pay off all of the drill cost and the installation plant cost and the surface plant within 12 to 18 months, we're going to increase that revenue quite substantially over the next 2 to 3 years. Next slide, if we can. What we're doing is we're lining up the ducks. We're ticking everything off. Over the last couple of years, we've been on time, on cost with what we've been doing. The idea in the small cap sector is that you make small promises and you keep them, and you don't get into the trap of where you're going to have to raise capital at very, very low levels. And so we can self-fund everything we're looking to do over the next few years. If we can look to the next slide, we've got a board. We've got myself, Sarah Edmondson, who's an American living in Rome, and Joseph Constable and Katrina O'Leary on the board. Next slide, if we can. And we've got in Italy, Giorgio Patuzzi, who's doing a tremendous job as our exploration and new projects manager. Diego Ballestieri, the engineer who's doing all the development and production. These guys are really on the ball, along with Gianluca and Pierpolo and Daria. We think we've got world's best people on the ground. They know Italy, they know the ministry, and we're doing a terrific job there. So that's working very, very well. If you move to the next slide, what we've got is a map here of the Selva Malvesi field, and in the green there, you can see in the center, where we can see the Pot des Mers well, which is currently producing. We've got north and south, which is just to the within 2 kilometers of the Pot des Mers well, and we are doing the seismic and doing some work in this area, looking to drill this year, and that's going to substantially increase the cash flow that we've got coming in with those 2 lookalike wells. We've got East Selva, which is within 5 kilometers of where we are at the moment, and Ricardina, which is going to require a little bit more seismic. But we think that if we can bring these on stream, we're going to be able to produce substantial cash flow, which is quite exciting for any investors. If we can move to the next slide, our timeline. We've got the production coming through from the Pot des Mers well. We've got the Selva seismic that shoot that we're in the process of getting organized and getting processed. We're now in discussions with ministry. We're getting authorization for the drilling as a producer. We've got great relationships with them. and a great attitude that's coming out of the Italian authorities that are very keen for us to produce domestically for their security. We've got the north and south drilling, which we're looking to do. So hopefully by next year, we're hoping to be able to produce from more than the one well that we've got at the moment. And we'll have wells 2, 3, 4, and 5, these lookalike wells. We're looking at Tito Rico, which is the offshore concession that we've got. We're looking to either sell that outright and return the capital to shareholders, which will be terrific, or have a free carry on that one. That's $37 billion of 2P reserves, 37 billion cubic feet, I should say. It'd be nice if it was $1 billion. But we've got it, it's in about 30 meters of water in the Adriatic, and it's about 12 kilometers from the E&I platform. So we've got environmental approval for that. So that's great. So there's been an opportunity for us to really make some real opportunities to return some capital to shareholders there. If you can look at the next slide, the last slide, we're looking at the production's providing strong cash flows. We've got a growth portfolio with development and exploration upside with those lookalike wells, which will support our future growth. We've got the exploration partnership opportunities. We've got Tito Rico particularly. We've got revenue from PM1, which means we don't need to do any dilutive capital raises. And we've got strong market conditions for the gas sales in Europe. And we're very excited that we can put our on-the-ground team to work to bring some substantial value. We are a hidden gem because we haven't got many brokers that are following us because we don't need to do capital raises. But nevertheless, we can realise quite some substantial revenues for our shareholders and some capital returns we're looking forward to over the next couple of years. Thanks very much, Manny.
Thank you, Kevin. You're right. You know, having a nice little bit of positive cash flow never hurt anybody. So you're right about that. Just coming back to now, you did put out a calendar there, but just remind us. So you've got Selva north, south, and east. When do you think realistically we can expect to see production? But you know, those particular, well, probably north, south, and then to a sort of lesser extent east. When can we expect to see those guys come online and see that cash flow added to the existing cash flow?
Sure. It takes about 18 months to develop these resources. So we've got to get approvals through, we've got to get the drilling done, and then we've got to connect them up to the grid. And so we're looking to do that as fast as we possibly can. We're looking at hopefully next year, during the course of 2025. That's what we've aimed at. And then East should come on within about 6 months after that. So I'm talking, the next 18 months to 2 years to, 2.5 years, we should have one after the other coming on stream. So if we get north and then we get south and then we get east, then we get Ricardina, there's a program of just one after the other, just letting them come on stream and increase our production and our cash flow. So we're using that cash flow from production on Pot des Mers to drill and then develop north, south, the east, and then the Ricardina site, as well as looking at taking some of the other sites like the Torre de Morro and the other work that we're doing elsewhere.
Okay, I mean, you've spoken about the relationship with the Italian government or the administration. Clearly, that's pretty good. And they've certainly sort of helped you along and have been happy to support you in doing that. What about the engagement with landholders? How's that going? Have there been any challenges, or is that also progressing nicely? Yeah,
we're within the Pot des Mers was within 1 kilometre of the national grid. North and south are within 2 kilometres of our current installation plant. We bury the pipeline underneath and pay rent to the local landholders. We've had very, very good relationships in the area with the local town, Bodrio and Molinella, and the local landowners. We rent the actual place where we put the pipeline to connect, and they've been very, very cooperative, and we're looking forward to working, very closely with them. We're wanting to be a good corporate citizen, and so that's worked really well in our favour to date. And we have no problems, or we don't anticipate any problems there at all.
Okay, and just to finish up, beyond the current the assets and the targets that you currently have, is there potential for the company to perhaps get involved in other opportunities?
There is, but I'm very cautious of being a Don Quixote tilting at windmills and taking all this cash flow and then wasting it. There's another Australian expression I won't use, but I see this again and again with lots of small cap. I want to return. We've got substantial assets here that have got substantial potential. Let's get some money back into the pockets of shareholders as quickly as we can. We'll use the cash flow to develop the further assets that we've got. And then I think that's, when you look at the numbers, it's quite extraordinary. If we get the lookalike wells, north and south and east, and then Ricardina, there's going to be so much cash flow. We're not going to waste it on just trying to build an empire. We've got a lot of major shareholders that are wanting to get return on their investment and get money back in their pockets. So that's what we're focusing on.
Okay, and I gather the board, given what you've just described, the board at some point will look at some sort of a dividend policy, I suppose.
Well, we're not announcing any dividend policy just at the moment. We don't want to have to pay our dividends and then have to go to market and try to raise capital to do a couple of these other things that we're doing. But in the next 2 to 3 years, we'll either have, return of capital, dividends. There's a whole bunch of very attractive options for us. And we're going to make sure that we're a company that's run by investors for investors, not run by management that's trying to build an empire and make lots of money for themselves in options and all sorts of other things. We're basically wanting to get the money back to shareholders.
Understood. All right, Kevin. Well, thank you for your time today. That was great. Hopefully, we'll get you back and with some updates down the track.
Sure.
Have a great weekend. Thank you again.
No, it's going to be a great. This end of June is going to be the first year that we'll have a year of production, and we'll start to see the numbers change quite dramatically. It'll be great to come back and talk about that then.
Great. Thanks, Kevin.
Thank you.
All right. Well, that's all we've got time for today. So thank you to our keynote speaker and the 4 companies today for their time. We will be back with another Hidden Gems webinar next Friday. Until then, have a great weekend, and we will see you next week.